Do you speak crowdlending? Welcome to our podcast covering the crowdlending industry. Our mission is to provide you with all the insights from this market and help you make informed decisions. I'm Gassen, co-founder and CEO of Acredius. We are a crowdlending platform based in Zurich, Switzerland. I'm delighted to host this podcast and hopefully bring value to all our listeners. Hi, everyone. Welcome to the episode number 10 of Do You Speak Crowdlending. Today, honored by having Vikas Jain. He's a senior commercial director at Funding Societies. It's a crowdlending platform from Southeast Asia. Thanks to Corona, this is very helpful because today we can reach out to the entire world from everyone from their very comfort of their houses and so on. So welcome, Vikas.
Thanks, Carson. Thanks for inviting me for this podcast.
Thank you very much.
It's good to be talking to you. Yeah.
Excellent. So Vikas, can you please tell us more about yourself and Funding Societies, by the way?
Sure. I'm a financial services professional. Have worked with banks, financial institutions, fintech companies over the last 17 odd years, including the likes of Citi and ING, which are global banks. Recently, I worked with Singapore Telecom, which is amongst the largest telecom players in this part of the world. I also have an MBA in finance, and I'm originally from India. I moved to Singapore about 8 years back, along with my family. Have worked with a couple of consulting companies, as well as Singapore Telecom, before I joined Funding Societies. Over the years, I have been involved in many different roles across organizations. Currently, with Funding Societies, I'm helping the company to drive marketing, PR, and raising funds through individual and institutional investors. The fun fact that I was actually the first person to join Funding Societies when we launched in 2015. The founders were still at Harvard at that point in time, pursuing their masters. And my home was, in fact, our first office. So the first few team members whom we hired were working out of my home before we got a proper office for ourselves. Over the last 5 years, we have launched our platform across multiple countries. We are there in 3 countries now. We have 5 offices, and we are about 350 people in the team now. On the platform side, so that was me. On the platform side, Funding Societies is the largest SME digital crowdlending platform in Southeast Asia. We are licensed in Singapore, Malaysia, and Indonesia. In Indonesia, we are called Modalku and not Funding Societies for localization purposes. We are backed by Sequoia and SoftBank, who are amongst the top 2 venture capital firms that have invested in the company. We primarily provide business loans to the underserved SMEs in Southeast Asia. And these are funded by individual and institutional investors on the platform.
Impressive.
Our value proposition, sorry.
No, I said just impressive. Very good.
Okay. Thank you. Thank you so much. Our value proposition for retail investors is that there are limited investment options and for them, and where they can invest with low capital, whether the product is easy to understand, and it gives them higher returns than traditional, fixed deposit kind of instruments. For SMEs, clearly there's a huge financing gap in this part of the world. Traditional financial institutions have not been lending to them as much as they would want. And they come to us for that short-term bridging requirement. So purely from a product perspective, the SMEs can borrow as small as $500. And the biggest ticket size that we have done so far is about 1.5 million. For the investors, they can invest with as small as $20 per loan. So it's very inclusive in that sense. So the smallest of SMEs and the smallest of investors can actually invest, can get their funding as well as investments on the platform. In the last 5 years, we have given out more than $1 billion in funding. This is across 2.4 million loans and has been crowdfunded by more than 250,000 investors from across the globe. We have also been fortunate to receive multiple awards and recognitions from Monetary Authority of Singapore, which is the Singapore regulator, the United Nations, KPMG, and many others. for the kind of work we have done within the fintech segment as well as the SME crowd lending space.
Excellent. Thank you very much for this sneak peek about the Funding Society's platform. That's really impressive. But let me ask you, I mean, you've been there from the very beginning. I mean, what made you choose to be in the crowd lending industry, P2P industry?
That's a question I get asked very, very often, especially given my background of having worked with larger banks and corporates and to then move to a startup, right? So I've spent my first few years, managing sizable consumer and SME lending portfolios back in India. And I realized even there was, a major funding challenge because banks and financial institutions usually cannot fund all kinds of SMEs, especially the smaller SMEs, because they have their own structural challenges as well as regulatory ones, right? Because of these limited options, SMEs either have to go to money lenders where it becomes very expensive, or go to alternative lenders who are not flexible enough to meet their needs. And this is something I've seen not just in India, but in Southeast Asia and even Singapore to some extent, right? And you would expect that the lending infrastructure in a more developed economy will be a lot better, but unfortunately, it's not. When I moved to Singapore, one of the things I realized was that there's almost a $500 billion gap in SME financing in this part of the world. This is as per the World Bank and IFC report. And when the founders reached out to me, they told me that out of this $500 billion gap, about $200 billion is addressable through a crowd lending concept. Kelvin and Renaud both are the founders of funding societies. And when they were studying at Harvard, they came across this concept of P2P lending, crowd lending, as we call it, right? Where many platforms in the US and UK are lending to consumers as well as SMEs through this model and helping them grow. I think SME lending, SME lending is very close to my heart also because of the impact it creates, right? It contributes to the GDP, it creates employment. It also serves the society at large, right? And that's probably one of the reasons why, we decided to call the company Funding Societies. So given all these reasons, as well as my experience with larger financial institutions, I thought that by joining funding societies and helping the company, I can also help the SMEs and eventually impact the countries by themselves. What did help me was the fact that throughout my career, I've been involved in new ventures and new initiatives, right? So starting from scratch, being the first employee, right, was not as daunting for me as it would be for many people. Yeah, and when I spoke to Kelvin and Renaud, they came across as very passionate about Southeast Asia and about SME lending. So that definitely helped me make the decision faster.
Excellent. And you guys just raised $40 million in a Series C funding round. So I will not ask about the details of the funding process, but what was the most challenging question the team needed to address from the investor side?
Oh, investors ask a lot of challenging and difficult questions, don't they? But on a serious note, it was around why it's important to scale up profitably. Okay. I think especially after the WeWork debacle, most investors are very careful about, they're more concerned about scaling profitably than just scaling, right? Mm-hmm. You would know, being a founder yourself, right? At early stage, profits hard to come by because the business has to focus on scaling up. Mm-hmm. But what has changed now is that you have to scale up in a profitable manner. Because, for investors, it's not just scale, it's profit, which matters a lot. They don't invest in a dot, they invest in a line, which means that you must be able to show them a growing trend. Yeah. For us specifically, valuation was less important in the overall projection of the company.
Mm-hmm.
We were rather focused on maximizing the probability of success instead of the dollar value of success.
Yeah, I see.
Yeah. The other problem with higher valuation that comes in, and that's something we have realized over the last couple of rounds, is also that once you get a higher valuation, it becomes harder to raise the next round, and we didn't want to make that mistake, right? So that's the reason why we don't worry as much about valuation, but are clearly focused on scaling up profitably.
Excellent. That makes a lot of sense, definitely. So coming back to the crowdlending industry in Southeast Asia, how is the landscape there?
Southeast Asia is a very highly fragmented region, right? Many small countries and a very large and diverse population of, if I recall, it's about 640 million people, right? There are, from a SME lending and financial access perspective, there are many foreign and local financial institutions who are lending to SMEs. However, there's still a huge funding gap. And that's where I think there's a huge opportunity for crowd lending. The concept itself in this part of the world, at least, is just about 5 to 6 years old, right? And we were among the first few platforms to start crowd lending in Singapore and then rest of Southeast Asia. So a lot more needs to be done. Still early stage, I would say. Even majority of the crowdfunding platforms are only focused on a single country, which means that the markets that they're accessing are fairly small. Very few have a presence in more than one country. We are probably the only ones who have a presence in 3 countries right now and a license in 3 countries as well. Within Southeast Asia, Indonesia is the largest market, while markets such as Thailand and Vietnam have a lot of potential. Singapore specifically is a very, very competitive market with about 3 or 4 large players and quite a few very small players. And all these players are catering to just 200,000 SMEs. So SMEs do have options, though not everybody gets the funding at the right terms.
Yeah.
Again, on Singapore, it's a fairly adolescent industry. The market is growing, and we have already seen a few platforms either being bought out or going through a consolidation phase. We ourselves are trying to create an SME bank in Singapore and are one of the applicants for the upcoming digital banking license.
Excellent. So you're becoming a bank. I mean, how is the regulation in Southeast Asia? Is there a clear regulation about crowd lending or P2P?
So some of the countries do. For example, the 3 markets that we are present in, Singapore, Indonesia, and Malaysia, have clear regulations. And they have issued different licenses covering the P2P activity, right? For example, in Singapore, the Capital Market Services license for dealing in securities also covers crowd lending. While in Indonesia and Malaysia, there's a separate peer-to-peer lending license which has been issued. We have been amongst the first ones to get a license across the 3 countries. And the other countries are coming up with regulations and are at different stages of either drafting, or is at an approval stage, or it's been approved, but it's not been ruled out yet. Once that happens, we would potentially look at the other markets as well. What we really like about the approach that majority of the regulators have taken in this part of the world is that they've been quite prudent in terms of, ensuring that, the regulations come out as soon as possible before the industry becomes too big and it becomes difficult for them to control it, right? This is especially, quite smart given what happened in China, right? Where there were no P2P regulations for so many years. And the aftermath of that is something we are all aware of.
Great. Now that's regulation is definitely a big topic, and now I understand the motivation. So in that region to already start regulating this market, because everyone knows it will be soon very big. So very regulated at a smaller size, which makes a lot of sense too.
Absolutely.
And speaking, so now just to put things in perspective here to our listeners, so we are recording this on July 1st, 2020, and the corona is still a little bit everywhere around the world. So how is this current crisis affecting the industry in Singapore or in Southeast Asia in general?
For an open economy like Singapore, I think global shocks due to COVID have deeply impacted local firms. SMEs across various industries are facing a liquidity crunch. Some are facing order cancellations. Others are experiencing a loss in revenue. Many of them are not even able to pay their employees, right? For our personal experience in March, when things started, unfolding in Singapore, was that we suddenly saw about a 40% jump in requests for loans because a lot of these SMEs were anticipating that their businesses will get severely impacted and probably were trying to ramp up in terms of cash flows so that they can tide through the period. In April and early May, then we saw that the number of requests started coming down for new loans, but we saw an increase in requests from SMEs to restructure their loans. So yeah, as a two-sided platform, what we have to usually do is we have to carefully balance this out. So we cannot always meet the needs of SMEs in terms of restructuring or new loans, because the other side is the investors, right? And they are the ones who are taking risk on these loans. So we have to be very careful. And that's why what we did was, so we continued to give out loans, but we focused on specific sectors which were still doing all right given the situation. And we started aggressively pursuing sectors which actually needed more support or were stretched in terms of resources because of the activity within these sectors. For example, healthcare, cleaning services, sanitation, which had a higher demand due to COVID, right? And we have been funding these industries a lot more in the last 3 months than we have done in the past. We do empathize with the SMEs, and that's why on a case-to-case basis, we have restructured the loans to help the SMEs out and for them to be able to repay on more easily, right? For investors also, what we have done specifically during this period is that we have reduced our minimum deposit, which used to be about $500 to about $100, so that they can invest at a smaller quantum as they deem fit. And selectively, we have waived service fees also for some of the loans of a certain period of time to help them out.
We did something similar from our side too. So we also took out the fees from the investor side, so to encourage them to help the economy in these difficult times as well. Great.
That's very nice. Yeah.
So Vikas, so as the senior commercial director, what are the main, I would say, challenges for you in general to introduce crowdlending to lenders? I mean, whatever, retail or institutional.
Sure. There are multiple. For instance, yes, we all know that, right? Having said that, a few which are probably top of the mind that even after 5-6 years of crowdlending being there in Southeast Asia, I think the awareness from an investor perspective is not as high.
Yeah.
As say some of the traditional investment products, right? So we end up spending a lot of time and effort into educating people about the concept itself before they start investing.
Yeah.
The other challenge that we face is, especially during these times, right, where we are a lot more selective in terms of the kind of SMEs we fund. And the quality deals are not as many, right? So that what that means is that there are lesser loans on the platform, which leads to a bit of a cash drag for investors.
Yeah.
So what we have done, especially during these times, and we are in the process of also doing, is to come up with more products to address the needs of the deserving SMEs, and thereby provide more opportunities for investments for the investors. The third challenge that we face is in terms of being able to meet the needs of different kinds of investors, right? We have some who are aggressive and looking at only double-digit returns. And then we have certain investors who are very conservative and who are saying, hey, I'm not looking at, very high returns, but as long as, my money is safe, right? And they're open to even returns of about just higher than fixed deposit in this part of the world. In Singapore, which would translate to about 3 to 7% kind of returns, right? To cater to this segment of investors, we have recently introduced property-backed investments. So these investments into loans where property comes in as a security. So we create a first lien or charge on the property. And these properties can be auctioned off in case there's a default. Usually the loan to value ratio for these property-backed loans or investments is about 60 to 70%, which means that even in a depressed market, we should be able to auction off the property and to be able to recover the full principal as well as the interest. So that's one. The other product that we have recently introduced is a guaranteed return investment product. So wherein the risk of the loans is taken up by funding societies, while the investors get a guaranteed return on the product. So this is lower than other products in terms of returns, but it gives you the surety that even if there's a default, the risk is not theirs. And we were the first platform in Singapore to offer these kind of products. So this is really helped in being able to address the more conservative investor segment, which was not coming to us before this. Beyond these challenges, I think we are fairly well covered. We have potentially the largest investor base in Southeast Asia for similar platforms, and we have the maximum number of products. We have a mobile app, a desktop version to meet different investor needs. Our default rate is amongst the lowest in the industry at about 1.7%, even factoring in the COVID impact, and which has translated in the fact that about 50% of our new investor acquisition happens through word of mouth.
I see.
Yep.
Great. So, Vikas, we spoke about this industry now, but our listeners are interested in knowing what are the main advantages of this asset class. From a lender perspective.
P2P investments would be considered an alternative asset class, which allows investors to diversify their portfolio on top of their traditional investments like stocks, bonds, etc., right? Because these have lesser correlation to the stock market, they help to mitigate volatility within the investor's portfolio. Typically, P2P investments are short-term. In this part of the world, the average tenor would be 5 to 6 months with a maximum tenor of about 12 months. There are periodic repayments which are made. And overall, it's a fairly easy product to understand for investors. The periodic repayments also help in terms of creating a compounding effect because you can reinvest the amount that you receive and earn additional returns on that. Lastly, I think the capital required to invest is also quite low. For example, with funding societies, an investor can invest with just $20 per investment, which helps for the smaller investors to also create a very well diversified portfolio. If they want to invest, $2,000, and if they invest $20 per loan, they can still invest in about 100 loans, right? Which helps in terms of diversifying the portfolio.
I see. So on that sense, what would be your advice for any beginner retail investor who wants to start with crowdlending? What do you think the best path would be?
I think the most important thing for them is to choose a platform wisely. There are a lot of platforms around. Not everyone will meet your requirements. So a few checks and balances that you need to do before you choose a platform is look at the statistics on past performance, check whether they are regulated and licensed, which is very important. Check also who the backers are. And if possible, attend one of their investor seminars to understand how they do due diligence on the underlying loans. This will give you a good idea as to how the platform operates and will help you make a decision of whether you want to invest through that platform or not. If you find multiple platforms who are good, then go ahead and diversify across platforms as well. The second I would say is that you need to know your own risk appetite. A lot of investors don't know that, and they choose the kind of investments that may not be suitable for them. For example, the previous example, the point about conservative investors investing into asset-backed or guaranteed products, right? If these investors invest in unsecured products, which have very attractive yield, but the risk is also higher, it won't work for them, right? Because it doesn't meet their appetite. That's something very important, to know what kind of investments and what kind of returns you are happy with, and then invest accordingly. The third would be that every platform or most platforms create a fact sheet or a memorandum, right, for each deal that you invest into. So read that. At least, even if you're busy, at least read the first few before you invest into these loans, because then you will understand the kind of deals that are coming on the platform and how is the platform assessing them. If that meets your requirement, then you should start investing. Even after a few investments, it's still a good idea. And even if you have confidence in the platform, it's still a good idea to periodically, on a sample basis, look at the fact sheets and see if the quality of loans have deteriorated or it's still the same. Lastly, and most importantly, is to remember to diversify your portfolio as much as possible, which means invest across as many deals as possible, invest across industries. Don't concentrate on a few deals or a few industries, even if you think you're an expert in a particular industry, because anything that happens within those deals or those industries will have a huge impact on your portfolio. The old adage of not putting all your eggs in one basket still holds true.
Great. Thank you very much for these insights, Vikas. So basically, know yourself, know your appetite, focus on the platforms, read the fact sheet and the description of the projects, and diversify. So speaking about diversification, we have had some very interesting answers to the last questions that I'm going to ask here, but I'm really curious to know, what's your favorite fruit, Vikas?
Favorite fruit, is it?
Yeah, fruit.
My favorite fruit is grapes, and especially during these times, I think it's become even more favorite because it comes in many different colors and doesn't have a color bias.
Excellent. We got the point. So grapes is your favorite fruit with many colors. Vikas, thank you very much for all these insights. Very, very interesting. Any last point or idea you want to share before we close?
No, I think it was very interesting talking to you.
Thank you.
Very happy to share my thoughts and very interesting questions from your side as well. I hope it will help the listeners to understand crowdlending better, potentially look at it as an investment for the long term. And hopefully some of what I've shared will help them in terms of their investment decisions as well.
Excellent. Thank you very much, Vikas. Thank you, everyone who are listening to us. We hope that we're adding value with this podcast, and basically see you or hear you or listen to you or, well, see you on the next podcast. Thank you. Bye.
Thanks, Carson. Bye.
I hope you enjoyed this episode. Thanks again for staying with us until the end. Make sure you subscribe to our podcast and follow us on social media so you'll never miss an episode. Please don't hesitate to send us your questions and comments at equidius.ch.